Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity. Prepare for your retirement. Safeguard your savings. And nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Good morning. Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, and your retirement here on the Max Out Savings Show. It's one of Houston's most popular financial radio shows. We talk about building wealth, understanding the world today, and how to increase your savings. Our motto and our philosophy is to save aggressively and invest conservatively. And save aggressively, invest conservatively. That's the key to building up wealth over the long term. And you want to start out with your 401k plan. Look, at Max Out Savings Advisors, we don't manage 401k plans. We typically manage we manage IRA rollovers. When you retire from the company, when you leave, you come talk to us. You have an old 401k, a trust, something. We manage those using our value investing approach. But we always talk about this first because this is how you build up the wealth. This is how you start out. This is how you understand the world today. It is by saving aggressively and then conservatively investing the money. That's the secret. And so you want to do at least a minimum of 10% plus the company match to collect the free money. Oftentimes, companies will give you 2-3%, 4% or more, depending on the company match. That's free money. If you put in $5,000 in your plan, let's just use a number, and the company match, and if you're making $100,000, let's say when you put $10,000, you're making $100,000. The company match is 5%. You're getting $15,000. You're getting a $10,000 deduction from the government, and then So you got your $10,000 you put in. The company gave you $5,000. You've got the $10,000 deduction. So you put the $15,000 into your 401k plan. And then that grows tax-free until you retire 30 years later, 20 years later, depending on, where you are and what your situation is. So that's how you look at it. That's a really good deal. Big companies don't get that deal. Wealthy people don't get that deal. Warren Buffett jumps through all types of hoops just so he can avoid paying taxes. He's probably the best in the world at it. He's certainly the best big investor I've ever seen of any size that's been so good at managing his tax changes. So this is something we want to watch. By the way, we're getting a little bit of it sounds like clipping almost on it. Could you just check that out a little bit with the sound? So that's something. Let me see if we can take care of a few things. See if we can knock out a couple of things here. See if this will improve the situation. So that's really what we're looking at here in the world today. Is first you start saving money, then we deal with a very complex world. We're coming up with an election right now. We got Kamala Harris on one side, Donald Trump on the other. Two very different paths the United States is going to choose going forward. One of them, I think, is really more of a pro-human agenda, more of a free market, capitalistic, freedom of speech, constitutional system. The other is kind of a move to the New World Order, where we take our marching orders from Klaus Schwab and Davos. And we have this kind of elite class that's smarter than the rest of us running the world. And you really want smart people running the world, but you want them to bubble up through the bottom, through the top, like J.D. Vance, like people across the United States have kind of always done. We don't want this kind of aristocracy at the top telling us what to do. I mean, if you really look at this, remarkably, this election almost it almost reminds me of in a way of they're trying to topple the monarchy. It's really been a monarchy of, the establishment puts their candidate in, and pretty much nothing changes. They engage in wars all over the world, and basically put in place programs to help out the the rest of the aristocracy that's attached to the monarchy, and you kind of you inherit your wealth. You inherit your titles, and it's an elite class, and that's why they're fighting back so hard, because they see Donald Trump coming in at people like J.D. Vance, quite frankly, Elon Musk. These people really had nothing, and they really came from nothing. And they don't owe their elite. They didn't inherit their titles, so to speak. And so it's really a different world. One of them wants open borders. One of them wants closed, borders and countries. One of them, it's real important if you have citizenship. That kind of goes back to ancient Rome. You remember Paul was a citizen. That's why they, when they were going to sit there and try it, they had to send him over to. I think he went to Rome or something. But because citizenship was important. They said, the governor's got to sit there and review this. Citizens, there was an advantage. And one side, Kamala Harris says, look, there really is no advantage to citizenship. Anybody can come to the United States and collect benefits and get free health care. The whole world is obligated. It can do this, and the only obligation of the populace of the United States is to work hard and support these people. And you're like, wait, what? But and I really think it's a huge difference. I think it's really, it's one of Kamala's she had an event, and she had like a rally, and someone or a group of people yell out, "Jesus is Lord." And she goes, well, you need to go to the other rally, down the street, the Trump rally, which is across the way. You're at the wrong rally. And that just speaks volumes of who these people are. And I think we need to understand that. She refused to show up at the Al Smith dinner, which is a Catholic charity, because it was a religious. I mean, it's just she's... Well, look, we need to be realistic. Kamala Harris is basically a pagan, period. And so it's two different things. So there's a lot of that. I mean, there's big differences between the two. If Kamala gets in there, these wars continue, open borders. The United States kind of goes into the waste bin of history as one of many countries, and there's really nothing special about it. And we're going to have more rules and regulations. They're going to tell you how to live. You'll own nothing, but you'll love it. But it's like, wait, nobody wants to live in that world except the people at the top. And the interesting thing is the people it's the people walking around telling people they'll own nothing and love it are the richest people in the world. It's like, wait a minute, I didn't see you give away everything you own and own nothing and love it. You seem to want us to give away everything we own and you'll love it. And so understand this is a seminal election. You should get your friends to vote. If someone hasn't voted, they should. Look, the best thing I can give you for and I didn't really want to get into politics, but it's hard. The best thing I can give you to help you convince people that maybe might not want to vote for Trump is, I think the best way to look at it is, this is a different Trump administration. This is a different Donald Trump. It's a fundamentally different Trump. I really think that assassination attempt really altered Donald Trump. But even if it did, it's a completely different administration. His first administration had his cronies in there and, basically his buds. He sort of trusted. They really don't know much about government. This is a group of people and they just wanted to cut taxes, put tariffs on to stop it and enforce the border. That was pretty much what his whole plan was. It wasn't that, he wasn't a radical president. He didn't really do any, what's remarkable is he was very peaceful. He was really a very nice presidency for all practical purposes. But this group is different. These people, they're realizing we're in trouble. the country's in trouble. The borders are in collapse. Lawlessness is spreading. Our deficits are spiraling out of control. We're borrowing $100 trillion every 100 days. Everything is breaking down. Things aren't working. So he's put together a different group of people. It started with his son, Donald Trump Jr., much smarter guy than people give him credit for. Donald Trump Jr. convinced him to put J.D. Vance in there. J.D. Vance came up from nothing, goes to Harvard, actually goes to the military, then goes to Harvard Law School, which is that's a tough place, and the people there are really very, very smart. Comes from dirt poor, literally, up to where he is today, and he remembers where he came from. And then he brings in Tucker Carlson, another guy. I can't say he's dirt poor by any stretch. He's actually, his family's extremely wealthy, going back generations, but that's another story. But again, a guy that wants to change things, a guy that says there's another way. He brings in Vivek Ramaswamy, one of his competitors. Vivek wants to change things. He wants to make things for the better. He's come into this country. He wants to improve the world. He brings in RFK Jr. RFK's like, the food we're eating is poisoning us. The drugs we're getting are bad. They're not really working. They're just treating symptoms. They're costing us a fortune. And there's too much cronyism in the thing. He wants to fundamentally change. He brings Elon Musk. Elon Musk, I've said he's an ISA. The best comparison I heard to Elon Musk was really, Elon Musk is the Da Vinci of our age. That goes back, hundreds and hundreds and hundreds. I think it's over 500 years. And so this is a person that wants to put humanity on Mars. Doesn't just want to do it. Doesn't just talk the war. He's building spaceships. If anybody saw what he did with rockets this week, over the last weekend, and I wanted to go so badly, and I didn't go down to watch it. I'll catch the next one. But he has a reusable rocket the size of a Saturn V rocket. And I've got some comments on that coming up here shortly. But he has popularized electric cars for all the talk from the Global Economic Forum to get rid of CO2. This guy did it. They hate his guts now because he supports Donald Trump. One thing after another. He wants to come in with a government efficiency committee, Department of Government Efficiency. Doggy, like his doggy coin, but that's another story. But these people, they want to change. Tulsi Gabbard, a Democrat, very smart person, was a Democrat. These people are all. Donald Trump, what you can tell people is Donald Trump has created a coalition that has got a lot of moderates in there, that's got people that want to change the world. Look at his coalition. Donald Trump Jr., Laura Trump, Tucker Carlson, J.D. Vance, Vivek Ramaswamy, Elon Musk, RFK Jr. Look at Tulsi. Look at Kamala Harris. She's got Dick Cheney, the Cheneys. She's got John Bolton. She's got it's just a bunch of rabble-rousing warmongers. And some musicians and a bunch of washed-up actors. It's like, look at the difference in these two people. One group wants to change the world. Donald Trump has put together a big tent coalition that is going to fundamentally reorder the United States of America. And that is so important because we're in dire shape on so many levels across the board. We need big thinkers. We need people that can do things. Almost every one of these people have done things. They're not just talkers. They're not just kind of hangers-on. These people, they're not writing policy papers. These people changed the world in what they did, and they're going to bring this to the American people, and that is exciting. And so if people that are sitting on the fence or Democrats that maybe you want to convince, point out the coalition we put together. This is not Donald Trump out there issuing orders all over the place. This is a person that has put together a coalition to fundamentally reorder the United States for the better. And I think it's very, very exciting. And we're going to see who wins. It's coming up. And what I can tell you is our base case at Max Out Savings Advisors is Donald Trump's going to win. We believe he's going to win by a bigger margin than most people expect. Tell you what, we're going to be back. So how is this going to affect everything right after this quick break right here on the Max Out Savings Show?
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-627-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now, 713-627-0400 or visit maxoutsavings.com.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement. This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. Charlie Kirk was another one that's in that group. He's in there with Tucker Carlson. These guys are making big differences. Charlie's going all around to the college campuses, bringing in young people. Young people, particularly men, young men are just pouring into support for Trump now because they're excited. They see what's going to happen. So look. Why is it important that Trump put together a big tent coalition of people that will change the world? I mean, of Elon Musk, Vivek, RFK Jr., Donald Trump Jr., actually Laura Trump. Laura Trump has just done an incredible job at the RNC. If you notice, you're not seeing all the stupid mistakes that we're making before. I always felt like we were like Republicans were like Charlie Brown, going down the field and then Lucy pulls the football every single time, and they would do it again. But these people want to change. So why is it important that Donald Trump get in there? Why? But more important, why is it important that he's bringing this coalition in that's going to make big changes to the United States? It's our deficits. This is the issue we're running into. We just got the deficit numbers for fiscal 2024. I think it ends in end of September, right? So I think 24, $1.8 trillion, $1.8 trillion deficit. That's 6.4% of GDP. Now, it's very rare when unemployment, in a lot, unemployment's been under 4% for some this year and stuff. It's right around 4%. It's very, very, very rare to ever see deficits of 6% of GDP when the economy is good, the stock market's good. Yeah, those are the type of deficits you want when you're, oh my gosh, we're in a recession, unemployment's at 6.5%. We have to do things to help people out. That's not what we're seeing here. What happened is we had the COVID virus. It shut the government down, and the United States really, as a percentage of GDP, way overdid it with help for everybody over every other country in the world. I mean, a lot of them shut the country down and said, well, you're going to have to rely on your savings like the Chinese. As we talked about on our show last week, the Chinese are massive savers, but Okay, so yeah, you can make a case. The economy was shut down. People were hurting. Businesses, and we had to do something. I get that. But then what happened is Joe Biden got in there and he goes, "Wow, look at we spent all this money, didn't see much inflation, because the economy was in shambles. So let's just keep spending the same amount of money, and we'll just instead of like helping people, keep their business afloat or giving them some money so they won't starve, we'll just allocate it to our programs of the Green New Deal, infrastructure, do welfare programs, all those, we can open up the borders and we can sit there and give everybody $5,000 Visa cards. It's great because look, but the problem is then our deficits are going. So we started borrowing. Recently, we were borrowing $100 trillion every 100 days, give or take. $1 trillion every 100 days. And so the deficits are spiraling out of control. It's going to get worse. So what we need is someone is going to have to. So look, here's what's going to happen. Next year sometime, if Kamala Harris gets as president, Donald Trump gets in president, they're going to come trot out a budget. Look, we're raising taxes, or Kamala says we're raising taxes and everyone. Donald Trump says we're cutting taxes, but we're cutting some spending. Kamala says we're raising taxes and we're increasing spending all over the place twice as much, and we're doing this. And all of a sudden the dollar's going to start falling, and interest rates are going to start going up. And then what they think is going to happen, there's going to be, quote, a crisis. So what they think is going to happen is, then they'll come and put a dog and pony show in Congress. Oh no, it's social. What are we going to default on the government or not? What's going to happen? And then they go, we found a bunch of cuts, and they're going to cut 1%. And then it's going to be business use. That's not going to happen again because 1% is not going to solve $1.8 trillion deficits, 6.4% deficits in percentage of GDP. That's not going to. It's going to take our deficits are spiraling out of control. We're borrowing $1 trillion every 100 days, and a 1% cut is not going to get that trillion. Then it's going to take 110 days. So that won't work. So the only way to get out of this is going to come in with a package of probably some tax increases, but more importantly, some real genuine cuts across the board in government spending. And so that, but you need to have a group of people in place that can do that. Because if we don't, we're going to be in trouble. Now, Ted, where do you get this stuff from? Well, let's take a look at the September 18th. I think it was September 18th. The Federal Reserve came in and they cut rates 50 basis points on Fed funds. It was about 5.3%. They cut it to 4.8%. The first cuts since 2 or 3 years, because inflation's going down and everything's okay. But not only that, they said, look, hey, clearly inflation's close to 2%. We're at 5.3. So probably, they gave every indication. I don't know why I'm getting these clicks. They gave every indication that what would happen would be that we'll probably cut 50 basis points in the next meeting in November, mid-November. So it's going to be a 100 basis point cut. Let's take a look. So interest rates, of course, fell because interest rates are going down. So interest rates plunged, right? Well, because rates are cutting, and we're going into a rate cutting cycle now. This is good. Well, I'm looking here at the Bloomberg chart of the yield curve as of yesterday, and as of September 18th. Now, rates have fallen since that meeting. The short-term rates have fallen 0.1% on 1 month, 3 months, say 6 months or 4 month Treasury bills. It's about 5 basis points on the 10. So interest rates fell on the 6 month. But if I look at the 1 year, interest rates are up 20 basis points, and a basis point is like a percent. So 20 basis point is 0.2%. If I look out 5 years, interest rates are up about 25 basis points. If I look at the 10-year, they're up close to 40 basis points. The 20-year, about almost 40 basis points, and the 30-year almost 40 basis points. So interest rates, since the Federal Reserve has been cut their rate, the Fed funds rates have actually gone up when they should have gone down, because if the economy was slowing, inflation was going away, the Fed was starting to cut rates, then interest rates should have fallen. That's telling us that the Fed is making a policy mistake, and inflation, people do not believe inflation is going away. It's a very big thing. I showed a couple people these charts. They were kind of shocked by it because they just assumed that rates had fallen since the Fed had cut rates. And they basically fell to six months out, and then after that they started going up. And if you study the short-term rates, they're very, what they are is they're very, well, let me put this another way. If you look at it, if you look at inflation, it tends to it moves in 3-year cycles. We're about 30 months from the peak. Interest rates peaked around, I want to say, June of 2022 at 9.1%. So we're 30 months into the cycle, and so what I think what we're going to see is inflation is starting up. You're starting to see the strikes at Boeing. You're seeing the strikes with the dock workers. All these people want big wage increases. So the inflation is starting back up again. They're not slowing back down the spending. So this is what we're looking at. And I tell you, the other thing is that we're looking at is, let me see if this helps. If it's not, the one thing we're looking at is that let's see here. Bear with me just one second. Okay, Valerie, we're getting some type of clicking on the phone on this end. I don't know what it is. Can you check things out? So what we're looking at here is. There's a couple of the other ways to look at this as well. If we pull up the price of gold has been going up as well. And since the September meeting, gold is up as well. Gold hit $27.30 an ounce. And if you look at that, during that time, what did we say? We said longer-term rates went up almost 40 basis points. So interest. Okay, let's take a look at. Since the Fed, USD, since the Fed came in with their interest rate increase, the dollar's up about 3.5% decrease. The dollar's up 3.5%. Well, during that time, gold has gone up and silver has gone up, and interest rates have gone up as well. So the gold and the silver should have dropped with rising interest rates, rising dollars. That hasn't happened. That's telegraphing some other issues. Tell you what, can we take a break in here and take a quick? Why don't we take a break here and then come back?
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
And now, more of the Max Out Savings Show with Ted Gioka.
Welcome back to the Max Out Savings Show. I'm Ted Gioka. We're talking savings, investments, in your retirement. The show today is brought to you also by Rangoni Alto Gin. It's a botanical gin out of the Italian Alps. It's got some of the finest botanicals in the world, using recipes that go back hundreds and hundreds of years to create just phenomenal gin. If you get a chance, try it out. It really has many of the tasting notes of almost of a fine wine in a way, and they're able to put these things together because they've had the experience of, as I said, of just hundreds of years. Some of the recipes we use go back 500 years, and so it's a phenomenal drink. It's Rangoni Alto Gin. Look for it at local stores, and you can see with the kingfisher bird on the label. Now, so we're talking here about inflation is going down. The Fed has cut rates, but instead of interest rates falling along and they're going up, the dollar went up to some extent, and gold and silver are moving up, and we continue to see that. Silver broke out, this is a big story. Silver's broken out of a very long-term range. If you look at silver's had over the last 40 years, silver's had two runs into close to $40-50, and if you put those inflation adjustment on those numbers, they're a lot higher. But it took a break over 32.50. It closed at 33.20, 33.25 or something like that. A big move up. I think you're going to see silver go higher. If you look at silver's up year to date. We've talked a lot about precious metals. Silver year to date is up over what is it up? It is up 33%, and gold is up 26%, and so, which is really outperforming almost every asset class in the world right now, and it's signaling something is going on in the world. So somebody is buying an awful lot of gold and silver. It looks like the silver's breaking out. Copper's a little slower, but we like generally the commodities index just because you can't print more gold. You can't, the Federal Reserve can't print gold. They can't print silver or copper. Those type of things, I think look good. I think silver goes to $40 pretty quickly. One of the interesting things about the precious metal stocks is really they're lagging. If you look at, as Newmont, this isn't a recommendation because honestly, it's just I picked it because it's a big one, and but when gold in 20 to 2024, it was trading between $2,000 and about $1,700 an ounce, $1,700 to $2,000. During that time frame, Newmont was trading $50 to $80. And right now, gold is at $2,700. It's 35% above what the top was before, and Newmont's at $57. And they had basically $2.96 in earnings in 21 for Newmont, and they're projecting $3.88 in 25. So projecting almost $1 more in earnings. The gold price is 35% higher. And the stock is near the lower part of the range during that time when those numbers were lower. I mean, and as I said, you could go up the gold, the same with the silver stocks. It's almost across the board. They should be trading 35% higher than they are right now, just based on they're really basically pricing in probably close to a $500 drop in gold prices and maybe a $5 drop in silver at this juncture. And so if you look at the earnings, just on Newmont, it's they came in at what was it, 95% growth in 24, and then 27% growth coming out for 25. So they've got very good earnings numbers on these companies right now. And in many ways, the gold and the silver companies are kind of similar to the oil companies after 2019. 2019, where really people kind of threw their hands up. And then Biden came in with oil and gas, was against it. Everyone threw their hands up in the oil and gas sector. And the oil and gas sector realized, look, we can't just keep flooding it every time the price of oil goes up, flood the world with oil, then the price collapses and we all get stuck holding the bag. So they cut back their drilling and put more into stock buybacks and dividends. And we're seeing the same thing in the precious metal sector. So gold, I'm actually surprised it hasn't corrected. I mean, you could have a pretty substantial correction in here. It's expensive, but it doesn't seem to want to slow down. But the stocks just really are they're lagging this market as near as we can see. It's something that I think in a way the gold and the silver stocks are kind of like the oil stocks were in 2020. The Biden administration hated them. These big institutional money managers, they don't like gold, they don't like silver. They basically love stocks, and so they're not in the sector at all. And I think that creates some opportunities going forward. So this is something we want to kind of continue to watch, but it's the move up in gold is just really this thing is like a freight train. We don't see the U.S. public coming in, although Costco sells 1 ounce gold ingots and they can't keep them in stock, and so this thing could feed on itself. It's being driven by the Chinese, the Russians, Iranians, Polish, Indian central banks around the world. A lot of this has been driven. Once the U.S. tried to confiscate the Russia's holdings of treasuries at the Federal Reserve Bank, everyone in the world realized they had to have other assets in their foreign exchange reserves as gold, because you can't take away your gold because you own it. They can't just confiscate it, and it's really kind of feeding on itself. But also, Chinese investors have been losing their shirt in real estate, which they love. They love residential real estate. They've been losing money for years in the stock market. They're making money in gold and silver. Chinese tend to go with they tend to be momentum investors big time, and so they're buying. So the individual Chinese are buying. The Americans, I think, will eventually get on board. So I think this thing's got a ways to go. So that's something to think about here. But again, this is telegraphing what is the U.S. going to do about this out of control deficit? How is this? We have an election. We don't know what's going to do. But the gold and so they're looking at war in the Middle East and what's going to happen with Israel and Iran. Israel's going to do something. Don't kid yourself. I mean, they're just building up to the point where something's going to happen. And this thing could. I mean, a lot of people. If you look what's happening in Ukraine with Russia, I mean, Ukraine's losing horribly, and these Europeans and basically some people at the State Department and the White House are just we'll get Putin, don't worry, just stick with him. Like, wait a minute, you're losing it. This is 500,000 Ukrainians have died. What you people have done? What have you done here? And they're like, continue to. We got to have someone that can step up to the table like Donald Trump and say, "Hey, look, we need peace. Go and tell Russia this is the way it's going to be." But say, "Hey, you're going to get this concession. We can come up with something and negotiate a peace." And you got to get these just neocon hawks out of the White House because look, there's a lot of people, a lot of very, very smart people. We followed and said, "Look, this is going to World War III," and honestly, the way things are going, nothing's telling me differently. I mean, I think we have a chance if Donald Trump gets in there, and so. But gold is like, hey, look, we're not. You look at if you look at war, when things go badly, the one thing you want to own is gold. I can tell you that much right now. I mean, I can go back, to the Civil War, times where people were giving up their jewelry. I mean, I can tell you a story where Thomas Jefferson actually, I know gave some people a chest of jewelry that had been given to him to support the war effort. It was the final days, and the whole thing was coming down. He's like, "Look, I just left something for you," and it's just because that's the only thing that works. And so this is a concern when you're seeing this gold go up like it is, when interest rates are going up and the dollar's going up and gold is so. It's telling you something is going on out there. And so we want to continue to watch it. You want to continue to have parts of it in your portfolio. Again, it's been the best performing asset. Better than the stock market, better than tech stocks. So it's, we'll just kind of see where that goes. Now, a couple other things I wanted to touch base on. It's going to be interesting to see who gets in based on how are they going to change up the IRA laws? How are they going to change up 401ks, the giving? Are they going to put caps on IRAs? Are they going to tax Roth IRAs? All of these things are really there. And so I think once that happens, we'll bring that to you once we get an idea of what's happening there. I really think whoever gets in there, I think things are going to definitely change. I think things have been status quo in this government, honestly, for 25 years. And if Trump gets in there, I think you're going to see big changes, because what's happened in the United States is anytime someone comes up with a good idea for changes, there's been such entrenched, the deep state. Some of it's kind of maniacal, but a lot of it is just a bunch of people that are making a fortune up there that don't want anything to change. I mean, they're not trying to take over the world or anything. They just want to get rich, and they don't want anyone else to touch their stuff. And so every time people come up with changes, this massive lobbyist organization of lawyers and former congressmen get involved, and former cabinet secretaries and everyone else, and push it back so nothing has changed. We're reaching the point in the United States where we can't get anything done. I look at a story here from NASA's. It's an opinion. NASA's $100 billion moon mission. So far, NASA has spent $100 billion without getting anyone off the ground on its moon mission. To understand the level of wasteful spending, they spent $1 billion on spacesuits that have yet to be delivered. Their space launch system cost $28.3 billion. Each launch will cost $4 billion, quadruple initial estimates. This exceeds private sector costs. This is Elon Musk stuff, by the way, many times over, yet it can launch only about once every 2 years, unlike SpaceX rockets going up every couple months. I mean, I put the every couple months in there. It's just incredible. I mean, the system is not big enough to send up the capsule and the moon on it, so they have to send up two things to try to get it up there. It's just incredible. And then to build the new space station, they want to put. They're going to have to add another stage to the rockets. It's going to cost another $5 billion. They're years behind schedule, and his point is that a reusable SpaceX rocket is very likely to carry cargo in robots directly to the moon with no special things, no Orion, no gateway, no extra stages or anything. It's at a fraction of the cost. Now, the interesting thing about that is this came from Michael Bloomberg. Michael Bloomberg wrote this story, which is, and again, why aren't we relying on Elon Musk? By the way, Bloomberg clearly wants to put robots on the moon instead of people. For some reason, there's a group in this country that does not ever again want to put a man on the moon. It's kind of a mystery to me why they don't want to do it. I think we need to put someone up there. But to the point, this goes to show you, Elon Musk sits over there, builds these rockets down in Boca Chica, and if you haven't been there, you're making a mistake if you don't drive down to see it. He comes up with these systems, and he does it at a reasonable price. And yet here we have NASA blowing through $100 billion, and they haven't gotten anywhere, or things are going much slow. And by the way, I don't mean to pick on NASA. This isn't every single agency in the United States government. This is all through our Defense Department, our THAAD systems, which are very high level anti-ballistic missile systems. I think we've got 6 or 7 of them. We've given Israel one. They're giving another one of possibly. There's only 6 or 7. One of them supposedly flew out of Fort Cavazos or Fort Hood. That to protect the state of Texas. They should not take the THAAD system that's protecting the state of Texas to give to Israel, because it can be used here to protect us. But it just goes to show you they're not building enough of any of these systems. The cost on them are out of control at all levels. And so we have to get a group of people in to our government that can force, and we need to win big so they have a mandate to clean up this crony capitalism, clean up this corruption, clean up this incompetence that's going up there, and do things on a cost-efficient, time-efficient way to do it, so we can get our military in the field in sufficient quantities instead of complex military systems that we don't have enough of them that will fail the minute they get into the field, that are overpriced. I mean, it's that way with everything. Everything we're doing, the West Coast bullet train in California, they go through, what is it, $6 billion, and they've got 1,600 feet because they spent so much on consultants and environmental studies and everything else. We cannot afford this in this country, and so so if we can get these people in place, they can make the changes. They can reduce our budget deficit, which will reduce our interest expense, which is right now interest expense for 2024 was 23% of GDP. So this is exciting. So it's not. This election is not just about closing the border. It's about fundamentally reordering the United States of America, and this is as exciting as it's been since 1980 and 1960 with John F. Kennedy. But this is the type of people we're dealing with, and I want you to understand that. So this is going to affect things with the markets as well. This is going to affect your retirement. So what are you doing here? I mean, I don't think this stuff happens easily. I think it's going to happen with crisis. Now, normally I would say, look, Donald Trump is going to... Look, our research, and if you haven't listened to this show long term, back in 2016, we predicted ahead of anybody in this town that was on the radio, Donald Trump was going to win, and we were adamant about it. And we doubled down after the convention, and so they got 2 weeks to take out Donald Trump. If they can't do it, he's going to be the next president of the United States. Hillary was way ahead in the polls everywhere, and sure enough, we were right. And so. We think he's going to win. We think he's going to win successfully. And so you said, look, hey, this is good for the markets. I would agree, but the problem is this market has gone up all year into the election. Typically, you'd see a little bit of concern, like, we're not sure, what's going to happen with the war with Israel, all that. Instead, we're hearing, nothing to see with the election. There'll be no problems whatsoever, and Israel and Iran are going to get along, and it's going to be kumbaya. And don't worry, if Israel attacks, they're just going to hit a few military targets, and Israel has agreed not to touch the nuclear facilities and not to touch any oil things, and not to touch anything that's going to upset the Iranians. And people are like, yeah, this is great. I'm like, does any of this make any sense to anybody listening to me on the radio today? But that's so. I think in that environment, you got to kind of take this with a grain of salt and go, look, I think Donald Trump winning is a great deal. This is exciting for the markets, but it's kind of already priced in. And a couple other things we've been talking about here. We're hearing we got some good jobs, good retail sales were up great, much ahead of expected for September. Like, well, this is great. We need to be in the market. Well, this is the biggest seasonal adjustment on record. So they, quote, seasonally adjusted to make the numbers look good for the election. Well, let's take a look. Oil prices are pretty cheap right now, so that's really good. Let's take a look at that. Oh, wait, I'm looking at the inventories here. The inventories over the last month or so have been plunging on the markets for gasoline. What this means is the oil companies are emptying out their inventories of gasoline ahead of the election to keep gasoline prices down. And I think, quite frankly, the Democrats are doing everything they can through their friends on Wall Street and in tech land, through big stock buyback programs at Apple, Google, Microsoft, Meta, and the rest of the, tech fun crowd, they're buying back massive amounts of stock ahead of the election to try to prop up the stock market to make it look good. Oh, look, retail sales are great. Oh, look, gasoline prices are down. Look, the stock market's up. Everything is great. Vote for Kamala Harris. But what happens after the election? And that's the thing you're going to have to worry about in here. And that's the thing we're kind of watching closely. I think it's going to take some shifts. Look, we own a lot of oil stock. I mean, we've done phenomenally well in the sector. We're struggling a little bit just because I'm thinking if we're half right on what they're doing with oil, I don't think we're going to get good earnings quarter for the oil companies. So we'll see. And I think they're kind of holding the oil companies up because people are like, oh, thank God Donald Trump's going to win and they're not going to get rid of oil and gas. But so something to think about. So those are some of the things we're looking at. I think you want to look at going forward what sectors. I think you want to be careful in some of the sectors that are really profiting from the government. I think defense companies it's going to be tougher for them because they're going to start looking at cost. They want to see improvements in efficiency. The drug companies. I mean, it's like, hey, why didn't somebody come in? If you're being confronted by $1 trillion of borrowing every 100 days, and you're in danger of a downgrade or interest rates skyrocketing, you're going to go talk to the drug companies, and their lobbyists aren't going to be and say, look, I think this pricing is too much. And it's other areas like that. I think you have to see where are they going to try to get the efficiencies from. So groups that are working with the government are going to come under pressure. And I think this is something we want to kind of continue to watch. I think you still want to look at some of the stable demand stocks on pullback because they're having issues with inflation, which we think inflation is going to come up. But I think on pullbacks, the electrical area, the copper area, the commodities, those are going to be the better plays because we know that's where the money is going to go. Anyway, tell you what, we're coming up here in the end of the show. A couple things. We're going to be sending out our Max Out Savings Report next week, discussing a lot of these issues. We talk about all types of things in this report. We really try to come up with stuff ahead of what other people are saying to try to get you where you need to be. It's a completely free report. Back in 2007, we were writing that the investment banks were going to fail. We said Lehman Brothers was going to fail, and we put out the balance sheets to prove it, and we were right. We've done that time and again. It's a completely free report. We're not going to charge you for it. We're not going to call you up. We're not going to try to get you to buy anything. If you would like us to help you manage your assets at Max Out Savings Advisors, that's what we do. We manage retirement money, trust, those type of things, long-term money. We'll be happy to sit down and show you our value investing approach to the stock and bond market.
This has been the Max
Charles
Out
Schwab.
Savings
Just go to
Show with Ted
maxoutsavings.com. We'll see you next week right here on the Max Out Savings Show.
Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.
A large retail store